Hey, what's up? Welcome to DGen Ed. That's DGen education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Tuesday, May 6th. I tried to set the time for start at 8:15, but sorry, got a little bit behind schedule. Yeah, just work tires me out. Sorry about that. But yeah, let's go through the normal tickers. And then from yesterday, I did get a something in the chat on Wolfspeed, so I'll go over that one. And then for this video, I noticed in the chat just before starting it that I saw a request for Rivian, so I'll go over that one towards the end as well. Just trying to do this in like 35 minutes or so, so we can move on with our lives at the start of the new hour. But yeah, let's just begin with the UVIX. This is the 2x long VIX futures ETF, which closed yesterday on Monday, May 5th at a price of $41.22, being up about 3.5% on the day. And then it does look like it's going up almost $2 more in the pre-market, around 4.4% there. And yeah, so it did pull back to this downtrending level that I've drawn here. That was, a prior resistance of this parallel channel, pulling back to that. Also got this purple line here right around 40. And so, I must say that I did pick up just a couple shares of the UVIX. I was planning on accumulating a little bit more, but it didn't come down to, I believe my next ad level was like 38. It didn't come down to there. It did hit a low yesterday of 39.76. But yeah, my average is now 41, I believe. Just 2 shares, so nothing too crazy. Just looking for a quick 20% swing or so. And yeah, feeling good about this. And I feel like this is probably due to just people being antsy around the FOMC meeting that I believe starts tomorrow. And then maybe Jerome Powell speaks on Thursday. Not exactly sure, but there will be some volatility around that, and maybe there will be an announcement of some rate cuts, and so there could be volatility leading up to it, but then it cools off. So it will be very interesting to see that. But yeah, before I flip over to the VIX, let's just look at the volume has just been continuing to decrease. Just need a surge in volume, and that will pump up or break down. And we do see, lower highs here, lower highs in the RSI, no bearish divergence. See lower lows in the stock price, lower lows as well in the RSI, so no bullish divergence. And looking at the MACD, it looks red. Maybe it's going to flip green, maybe not. Don't really know. Then just looking over at the 10-minute time frame, we can see that yesterday on Monday, it does look like it gapped up into the pre-market, held that gap up those gains, but then retraced down to 36.77. It looks like it was the low for the day, although over here it says 39.76. Here it says 39.77. Kind of a triple bottom there, something like that, and then it moved up towards the end of the day. So based on the open, it was kind of flat, but of course, comparing with Friday's close, it did close up about 3.5% on the day. Monday held the gains into after hours, gapped up into the pre-market, hitting a high of 43.46, and this does look like maybe there's a double top there, but with the move over here, we do see higher volume, but that was when it was coming down. So maybe this is a double top, and this will be rolling over. We do see lower highs, also lower highs, so no bearish divergence. Very interesting to look at that. And then looking over at the VIX, we can see that it did break down below that uptrending level, which it apparently had days ago, week ago, and so that might be acting as some resistance to the upside around 28, and so that would represent about a 20% move from where it closed at yesterday, around 23.64. And so I should note that this is the market volatility index, or the VIX. 23.64, up 4.23% yesterday on the day. And yeah, we'll have to see where it opens up. I suspect it will be moving up because the UVIX is up, but maybe it gaps up and then pulls back. And now let's look over at the SPY. This is the S&P 500 tracking ETF, which closed yesterday at a price of $563.51, being down about 0.57% on the day and continuing down into the pre-market, currently trading around $558.73, or down almost $5. Did get this gap fill here at 564.50, did go above that. So, it was looking pretty good on Friday, but we did close lower on Monday. So I suspect that this could be pulling back to around 550, maybe finding some support here around this orange uptrend, which does go back to those lows from April 19th and let's see, August 5th. Those are the two pivot points over there. And so I think that could be acting as some support. And so where it closed at yesterday, 562, that's down about, almost 2%. But if I adjust the top of that to be where it's currently trading at, that is a downside move of about 1% or so. So it will be very interesting to see what happens with that. Volume, we do see a volume continuing to decrease, and so that does make me think that this is fairly weak up here. And we do see higher highs in the price, higher highs in the RSI, so no bearish divergence. Higher lows as well, so no bullish divergence, and then the green in the MACD does look like it could be topping out, could be rolling over. So I wouldn't be surprised if it does something like that, and then maybe with FOMC or Jerome Powell speaking, then we see this go up, and that would be because he's announcing some rate cuts, I would imagine. But maybe I'm wrong about that. But yeah, we'll just leave that doodle up there, and then maybe I'll just look over at the 10-minute time frame here real quick, so we can see that on Monday, gap down, and then bounced up higher to get back to where we were at, maybe fill the gap, I imagine, or get close to filling the gap, pulling back into close, and then gap down. And so actually, I'm just interested to see if there was a gap and if that was filled. So yeah, we closed on Friday the 2nd at a price of $566.76, and yesterday's high was $566.75, nearly filling that gap. Pretty interesting. I don't really think that the 2 cents there is that significant, but I do think that is neat to see. And then let's look over at the, not the VIX. I want to look over at the SPX. This is the S&P 500 index. Closed yesterday at $5,650.38, down 0.64% on the day. And this is the one where I think it would actually be more interesting or important if it did fill that gap. So on Friday, May 2nd, that date on last Friday, that close was at a price of $5,686.67, and the high from yesterday was $5,683.38. So did not quite fill that gap. You can kind of see it there that the top of that wick did not get to the top of the green candle here. But, just like the SPY, I do think that this could be pulling back to that orange uptrend. That would be around $5,560. Pullback panic before FOMC. Jerome Powell, I imagine, speaking on Thursday, and then this goes up. So that is what I would be looking for. But I must say, in addition to picking up some of the UVIX, I did pick up some SPXU. I actually trimmed it some this morning in the pre-market just because I wanted to have some more cash on the side to be able to add if it does dip lower. I took about a 2% profit, so nothing too crazy there. But yeah, this is the SPXU ProShares Ultra Pro Short SPX, or S&P 500. And so this closed yesterday at $22.39, up about 1.7% on the day. In the pre-market, trading around $23. And this Ultra Pro Short, this is 3x leveraged short. And this, what I'm looking at, basically these three lines here, potentially getting up to 24.73 or 26.89. I believe the orange is right around where I have a limit sell at. That's just 20% profit for me. I think my average is, right around 22 something, maybe 21 something. I'm not exactly sure. But getting up to around this level is, about 20%. So I'd be happy with that. I believe I have 6 shares now. I had 12, but just kind of wanted to divvy up my position between the UVIX, the SPXU, and then also I did get some SOXS, so I'll go over that chart in a second. And actually that's related to a different chart, so I'll probably just go over that here. But yeah, looking at the SPXU, don't really need to go over technicals with this because it is an ETF, an inverse ETF that tracks a different ETF, or the index. So yeah, I don't need to get too into the nitty gritty, but here we can see lower lows in the price here, also lower lows in the RSI, so there's no signal of bullish divergence or anything like that. And I guess I had a dividend per share recently. I did not partake in that. But yeah, I will pull up. Let's see. I'm just going to clean up the list that I have over here. I'm just going to remove the biddy so I can add more easily down here the SMH. This is something that Gareth Soloway pointed out in his game plan yesterday, which I will be watching after this stream. And what he pointed out, if I pull up the SMH, which is the VanEck Semiconductor ETF, that closed yesterday at $217.61, down about 0.6%, and it's down about 1.4% into the pre-market, trading around 214.40. And so what he pointed out was this uptrend, pretty cool. I had to kind of wiggle it around a little bit because it didn't correspond with the exact lows over here. But so I have one pivot point going back to the low from October 13th of 2022. There's a 69 in that number, 8169. So maybe that's a good luck charm. And so I had initially connected the second pivot point to be over here, the lows from October of 2023. But then I realized, well, hey, there's this low over here. Maybe I connect it there. This was a little bit of a fake out break. And that was the low from March of 2025. It looks like the pivot low from March 11th. And we can see that has acted as support. But then we more recently broke below it, kind of formed this little bear flag here, hit a low of 170.11, moved up, retested, got rejected, and then pulled back again. And with this forming higher lows, also higher lows in the RSI. So no divergence there. But then if we look at this higher high, again, no bearish divergence that I'm seeing at all, but we are actually starting to get above over here. So here we had, clearly we have lower highs in the ETF price. But then if we look over here from that same high, the RSI then was 58.82, but from yesterday it was 57.02, but on Friday 58.26. So starting to put in higher highs in the RSI, whereas we still have lower highs in the stock price. So that is hidden bearish divergence. But then if we take an even further step back, we can see the high from January 22nd to 69, good luck charm, 66, lower highs here. And actually, no, I'm an idiot because we are still putting in lower highs across the board. But here we're starting to get, kind of flat. So relative to this one, starting to look like, hey, maybe there is some resistance here. So that is why this is the semiconductor ETF. I believe I mentioned that, the SMH. You can also look up the SOXL and SOXX, I believe. But I have here the SOXS, which is the 3x leveraged short semiconductor ETF, closed yesterday at 1738, up 2% on the day, and then in the pre-market up about 4.7%. The reason why I picked up this is because of what I went over on the SMH, and the reason why I trimmed a little bit of SPXU is because I was originally planning on just going short with the SPXU and then holding some UVIX, but I decided, hey, might as well partake in the SOXS. This is 3x leverage short, just like the SPXU, but from what I have seen, that this has bigger swings, so I could get a bigger gain with this. So like the SPXU is up 2.7% in the pre-market, whereas the SOXS is up 4.6%. So I thought this could just be, a nicer way to get a bigger swing. And so maybe getting to, these levels here that I have drawn. I actually had an alert over here at 1750, and so I was like, oh, well, that went off. It's like, well, if it goes down to 17, which I didn't expect it to, I will then pick up some shares down there, a small position. So basically I have 6 shares of this at 17, I believe, 6 shares of SPXU, and then just a couple of the UVIX. And I don't have any orders plate, or I think I do for the UVIX and the SPXU, but I'm probably going to adjust them to be a little bit more aggressive since I did trim the SPXU. I thought, then I can add a little bit more with the SOXS, SPXU, and UVIX if they dip below my average, but currently it doesn't seem like it's going to happen. But yeah, so I'm excited about these to be hedging, market volatility and the downside possibility. So very cool there. And then now I will flip over to some cryptos. So here looking at Bitcoin, it does look like this is starting to break down. Currently trading below 94,000 or right around 94,000. And we did kind of pull back more aggressively than this green arrow that I have drawn. Maybe we come down to 89,000, which is going to correspond with the highs from over here from March 24th, right around there. But maybe it doesn't come down to 89. Crypto Rover was talking about this coming down to around 91. And I think that really just corresponds with this level here that I've alerted at 92,000. Just him looking at it going a little bit lower than that, and me maybe just being a little bit greedy, but I just don't necessarily want to get too aggressive with Bitcoin because I am doing more aggressive daily dollar cost averages than I previously was. So I'm not too concerned about dip buys at 89,000 or 86,000. But if it does come below 92, I'll just be happy to continue with those more aggressive dip buys. And with that being said, I think I can adjust the Fibonacci extension here. So going a little bit higher. So I can do this and then maybe, let's see, wherever it's pulling back to here, that would suggest, 108. So really just like getting back to those all-time highs, kind of that double top there. And if we do get back to that double top, it's either going to be very notable resistance or we're going to blow past through it. So it'll be very interesting to be paying attention to, very important to be paying attention to. I'd actually say right around, 106, 107, because we might have the wicks up here, but the candles came up to around 107. So that's really going to be the level to be paying attention to. But we could, like I said, be seeing a pullback to these levels. And then the reason why 86, I got that alert there, that has historically acted as notable either support or resistance, but also from the close, I believe 5 p.m. Eastern is the correct price, but also the data that I have here from Webull, probably not that good, but that's around 85,000. And so that was a Thursday from before Easter, so before Good Friday when the market was closed. And so that has not been filled yet, and that's around like 85. And also, this consolidation over here, a little bit higher than that, 86. Maybe we don't get all the way down to 85. So yeah, I would be very excited to add more aggressively there, but would also be prepared for, it to break down if that does happen. And then just to kind of take a step back, we can see 86,000. Had acted kind of as resistance over here. I don't know. It doesn't really seem like too notable of a level looking at the chart here. More so like 89,000. We did get a test of that. January 13th hit a low right around 89,000. And then real quick, let's just look over at Ethereum. This is now trading below 1800. So maybe we do see a pullback like I have doodle here to around 1600, corresponding with the consolidation over here. That might be acting as some very nice support before we then launch up to break above this orange uptrend, which goes back in time. I'm not going to take a step back too far. We can also see this 100% Fibonacci extension. I'm actually just going to zoom in here. I can adjust that to be over. I got that locked into place, and then just move it over here to this. Oh, not that one. Let's see. That should be locked, I guess. This one. Unlocked that. So let's move that over to 15, whatever that is. We'll lock that into place. And yeah, so not too surprising that maybe we're bumping into some resistance around 1850, getting rejected, pulling back to 1600. And, really it's just like, people look at this and they see, oh, bull flag. Oh, another bull flag. I am going to, just long this and then see this go higher. And then let's see. Yep, sweeping the lows here, sweeping anybody who was over leveraged long, and then people say, oh, it's going to break down, I'm going to go short, and then this goes higher. So that makes a lot of sense to me. So move up, retest that orange uptrend, and then go higher to around 22. And I do have that fib extension drawn to, and I should actually adjust that one as well because we are not going back in time here. Actually, maybe we will go back in time because we put a higher high in here. And so, yeah, this is just going to be a little bit more conservative having it go lower because of the starting point. Actually, yeah, I mean, it doesn't have to be that precise. I'll just do it. Yeah, I'll do it there. Why not? And so, and maybe with that being said, I should go from this low because that is lower. And so that would be suggesting around 2,000, 2,100, somewhere around there. But then, bigger target around 2,200 or 2,300 nearly. And that, goes back quite far in time. I believe that was the high from 2018. So, yeah, I mean, I'm just really excited about Ethereum, excited to be stacking while it's down here. The Doge, real quick, I'll go over that. This looks pretty weak. In all honesty, it's below my average, which is 17.4, currently trading around 16.5. And yeah, if this does go lower, let's actually see. Maybe we could do, like I got this Fibonacci retracement here. I don't know what that's based on. All the way, this big move here. So pretty cool to see that. But let's just do a fib retracement from the more immediate time frame. So there to there. Maybe this comes down to 618, around 15.4, but I'm just going to adjust that. I don't think we need the 786 on there, but maybe I'll put the 50% retracement on there. That does correspond with like the consolidation over here. That's around 16.1. I could definitely see it pulling back to there before maybe doing something like maybe that. But maybe it does break lower too. So I don't know. We will have to see. And then let's see, I'm just going to look over, I believe, uranium. I don't know if I'm going to keep covering this because it, yeah, I don't really know how helpful it is for you all. Let me know in the comments or the chat if you do want me to keep covering uranium. But, for me, it's just something I don't really pay too close attention to. I do hold some OCLO, and so that is like, I add when I feel like it, when I'm able to, but not too aggressively. But yeah, uranium, or ticker symbol URA, which is the Global X Uranium ETF, closed at 25.65 yesterday, down about 0.7%, and then continuing down about 0.9%. Maybe we see it pull back to around 24.50, which I have marked here before it goes higher. So yeah, I mean, nothing too crazy there, nothing really changing with that one. Did want to go over Boyle real quick. This is the 2x leverage long natural gas ETF. Closed yesterday at 63.54, down 3.57%. In the pre-market, it's down to around 61.30, down 3.5%. And yeah, so this does kind of seem like it's maybe putting in a top there, but with natural gas, good to be cautious with it. Gareth Soloway does cover this every day with his game plan that will be streaming in about 13 minutes from now. And so I'll kind of see what he has to say about it. I don't have a position I was looking to get long if it did come down to around 40. That didn't happen, so just chilling. And really, like, my swing trades are, like I've gone over the SPXU, the SOXS, and the UVIX. So that's kind of where I'm focused for the short term. Boyle really just not really doing too much with that or anything with that, but I will pull up over here the natural gas chart just so we can see that. And yeah, very interesting. I did do this Fibonacci retracement here yesterday, I believe, and that could be suggesting price coming down lower. But this, as I believe I have mentioned, that I am eyeing $2.78, currently trading around 362. So it's got some ways to go to the downside before I consider getting in. So maybe something like that might happen, but we will see. And actually, yeah, maybe I should just delete this one. Let's see. Click on that, delete that, and then do a doodle over here. So I would, oops, forgot I need to hold. Okay, I do want the brush. Okay, and let's see. So maybe this comes down, something like that. That will be nice. So, start building a position here and then get more aggressive down here and then maybe take profits up here, something like that. But yeah, and then now let's see, just because it was mentioned yesterday, Wolf, I didn't get to look at the chart, but what we can see here is it did close down about 8.5% on the day, around $4 or $4.08, down a little bit more, about 0.74%, down to 405 in the pre-market. And this one, I think, let's see, I had calls. I took some profits, or I took my profits on, I believe, the first last week. And then I didn't look at the chart. It's like, oh man, I could have made a little bit more money. But at the same time, maybe not. Earnings coming up on the 8th. Does look like there's kind of a double top over here. And what we can see is that, volume did go higher, but we were not, I guess we did close higher. But it's still, it's kind of showing some weakness around the highs that we saw on, what date was that? April 29th. The highs there were 470. So yeah, that doesn't look too strong. We did put in higher highs up here, also higher highs in the RSI. But yeah, this is kind of like, in my view, the gap up here is kind of like a little trap or a lure to bait people to want to, hey, the gap's not filled at 538. I'm going to go long until that gets filled. And from current price, that is around, a 30% move to the upside. But with earnings coming up on the 8th, so that's going to be on Thursday, maybe we see something, I don't know, like this, and then it retests that downtrend as support before going higher to then fill that gap. And yeah, we did get, we were retesting that downtrend. We did break below it, then we broke above it, but now it looks like we're kind of getting rejected. So yeah, I could see this pulling back. So I have this alert here at, let's see, 290. Is that right? That could be coming lower, maybe to around 224. And so what I might do is I might actually just adjust this to 269, just kind of having fun with the numbers, just making it a little bit lower. But that really, just corresponding with the 786 here, which I probably should adjust because we did go to a higher high. And oops, not that one. This here, if I adjust that to the high of 480, which was hit yesterday, we do have that 786 just below 269, that 786 at 265 about. So yeah, I could see that happening. Maybe we go lower, maybe we don't, but maybe I'll be alerted if we do pull back to that. But yeah, I think that right now is a time to be in and out of trades, not to be diamond handing things. And yeah, that's really what I want this channel to be about, but it has kind of turned into, whether it's people want follow-ups or, I want follow-up views doing, reoccurring videos on the same ticker. But really, I think that's just a bad habit. I think that we should not be getting attached to our stocks, not falling in love, trading them. And so I feel like this channel has really just not been the best as far as that goes. I think that we should be practicing more discipline, exiting our positions. And so, like with Rivian, I believe I'll open up the chat here. That the comment was time to buy Rivian. No, I would say not. I think that it's pulled back some, and I think that if there was a time to start adding, it would be at a retest of this. I guess that is parallel channel. Maybe that's a little bit wonky of a parallel channel, but yeah, I mean, no, I think it looks like it's putting in topping signals just like over here. And I would think that, let's see, higher highs. This doesn't really have that exceptional of volume behind it. I think that this needs to cool off. And since I am, let's see, maybe placing too much weight on that downtrend, I'm just going to delete it. And I'm going to delete this doodle because that clearly did not happen. This over here, the 786, did retest that. I would say, looking at the chart, looking at the levels here, this is what looks nice to me. The reason for that is because this consolidation here, that's going to start to serve as support. Buyers here, they're probably going to be buyers again. Earnings coming up on the 6th. So let's actually look over at unusual whales just to get some info on this. I'm just going to look over at the max pain for Rivian. So earning expected after hours today. Expected move is about 10%. That's about $1 plus or $1.30 plus or minus upside or downside. This week's max pain is $12.50, and then it goes down to $12 next Friday. And so with current price above that, I suspect it's going to go lower. $12, whole dollar round number. 1203 is what I have marked here. And that is based on basically the highs from over here. Also this consolidation here, kind of a bull flag before the move higher. And we can even do a Fibonacci extension to see that that kind of predicted the top over here. Got another bull flag and then, kind of a fake out top before pulling back again. So pretty interesting. That was around 1460 is that level there. And yeah, this corresponds with the closing price, I believe, from November 13th. That was at, 1203. And let's see, anything. Yeah, from the past over here, the high from May 14th of last year was 1213. So yeah, $12 right around there does seem to be pretty notable. And so I might actually just move this to that high so we can see, we also got, rejected from it over here and then gapped up above that level. So I could see this pulling back to around 12. And so now let's just do a Fibonacci retracement, kind of just a little bit before I do that though. Let's see, what did I have here? I don't want to be drawing more. I'm just going to delete that fib extension 905. I don't think that's happening. Or at least not right now. But let's see. So from 1036 up to 1416, kind of got a confluence of levels with 1226 there, the 50%, and then the 618 just below 12, around 1181. So in my view, the time to start thinking about buying is when it's down here. And then maybe it goes higher. That's a possibility. But then there's also the possibility of maybe it goes lower, finds support around these levels, and then starts to go higher. So yeah, is now the time to buy? No, in all honesty, with earnings, I think that this is the time to sell. I personally don't have a position in Rivian, but yeah, I don't know. I mean, how much of their vehicles are made in the U.S.? How much are made abroad? So maybe that's something there will have some forward-looking guidance, whether it's good or bad. I think that will have an influence on it. But yeah, very cool to go over that. And yeah, Hydro Hustle did go over Wolf. Good morning to you. So hopefully that was helpful. And then you also requested plugs. So I'll go over that real quick. I just got about 3 minutes to go over, and I'm just going to kind of clean up what I have over here. So let's see. The SVIX. Just looking at that, just curious to see what the high was. I got to 13.14. I still would have been in the red. I lost some money on that, but I think it's generally just a bad one to trade. So I am actually, I'm going to put that in the indexes, but I'm going to remove it from pre-market prep. So I can add plug real quick here. For me personally, I'm completely out of my plug position. I sold my basically 200 shares at an average price of around 85. I could have done better, but I was not as aggressive with a covered call that I had. I sold some at 80, or I believe it was around 80 cents based on a covered call, and then I sold some based on a covered call, an average price of like 90. And so I think I got out at around 85. And this, I just think that this is the trend is your friend, and the trend has been downtrending support, which is now flipped to resistance. It's trading below $1 listed on the NASDAQ. It closed the month. And also too, I think that this is really interesting psychologically. Towards the end of the month, to maintain compliance, I believe with the NASDAQ and the New York Stock Exchange, it's the same or approximately the same, that it needs to be 30 consecutive days trading above $1, and it needs to close the month above $1, or 30 consecutive days with an average price above $1. I think it's something like that. And so with the end of the month here, April 28th, get this gap up, goes to a high of 119. I could have exited at a better price, but I didn't. It is what it is. This is like the end of the month, want to get a close above $1. It gets a wick up to above $1, and then nope. And then on the, because it closed on that day at 102. So actually, yeah, on the 28th, hey, maybe we're going to get a close for the month above $1. But then we get this massive bearish engulfing candle closing the 29th at a price of 95.92, and then a gap down, closing the month of April at a price of 87.26, and this is just continuing lower. We do see higher lows here, higher lows here. If we look at, this is, it just looks weak. Generally, it looks very weak. Don't need to really doodle much else on here, but I'm just going to remove those drawings, just hide them, I should say. We look at the monthly. Yeah, this was April. That looks pretty bad. Large volume with it coming down. I think it's just going to be a continued bleeder. And I think that in this kind of market, whether it's because Trump is president, whether it's because of tariffs, uncertainty, I think that, I don't know if I talked about it much on the channel, but I would mention like a reckoning that we're going to be seeing a rollover in the stock market, whether it's a recession or we just need a correction. I feel like they're kind of starting to engineer, a recession. And I think that, something like plug, it may continue to bleed. So yeah, I no longer have a position in it. And so my stance, plug, charge point, very similar, is that, as far as I'm concerned, they're going to go to zero. And I think that it's just going to be opportunity cost holding for longer. And so that's, my sentiment, just because we've broken this downtrend, we're below it now. And we're probably going to need a reverse split. And actually, if we can look back, has plug had reverse splits? I don't know that they have, or they're not popping up here. But yeah, I suspect this will continue to bleed. So yeah, I guess I'd be looking for it to go below 76. But yeah, this is what I talked about in, or maybe I had a post about this going higher. And yeah, I'm out. So I think it's going to go lower. Yeah, so I do have a bias there, but yeah, opportunity cost. So, hopefully that's helpful. But yeah, we'll see. But I'm going to end this so I can watch Gareth Soloway's game plan. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more pre-market preps like this. I'll try to be on time tomorrow, 8:15 a.m.